Now to our first conversation. A survey conducted by SBM Intelligence, a Nigerian geopolitical intelligence platform, shows around half of Nigerian workers who earn the minimum wage in the country spend their entire income on food. Well, let's talk to the lady that put this report together now. Joining us is Shay Awojulugbe, senior analyst at SBM Intelligence. Great to have you on the show.
Good morning.
Good morning. So, quite an interesting report there, and I keep saying it that, salary earners are not finding it easy at all at this time with currency devaluation, rising inflation. Walk us through findings in your report, because I see that most salary earners, minimum wage earners, spend it all on food, and in local parlance, they say man must whack. So, tell us more about your findings.
Thank you for having me on the show. So the report was conducted by SBM Intelligence as the second edition. The first edition was conducted, of the survey was conducted in 2019. And at the time, people identified food as a significant part of their spending. But by the time we went back to the field in this year, we found that across the country, on the average, people spend on the average of 97% of their income on food. And also we found that in regions like the Northeast, South, and in the Northwest, they reported spending above 100% of their income on food. And when we asked them that, how is this possible? The respondents who participated in the survey told us that they have cut back on other parts of their daily living. They've cut back on other responsibilities, and some of them, a significant portion, also told us that they've taken loans to augment their income.
Talking about taking loans, walk us through what salary earners are spending more on, at this time. I see you have food there as a major spend. Show me other things workers are spending on at this time.
Yes. So apart from food, which people identified as taking a chunk of their income, they also identified utilities such as rent and electricity bills as taking significant part of their income, and also healthcare and family needs are some of the things that rank high on the spending priorities of Nigerians at this time.
So you did say Nigerians are taking a lot of loans, at this time to augment, spending. But I know most of these loans are not cheap, especially from loan apps, because we know the interest rates are really, really high. What other sources are there for loans that most Nigerians are taking at this time?
So apart from the loan apps and bank loans, which the respondents identified as the major source of their loans, across the higher income category, people said that they've been taking loans from their friends, which also follows, because if you are earning a lot, then you would move in circles of people who can afford to give you a loan. And so apart from friends, people identified Esusu, which is the local thrift contribution, as a source of credit for them. And for people who identified that they were doing businesses, they said they take goods on credit from their suppliers.
Definitely, the loan apps. Talk to me about the loan apps, because I see that on the charts there, we see that the loan apps, bank and loan apps, there's about 50% when you check the sources of loans and credit. How can they afford this?
Well, I don't think the question really is about affordability, especially when you consider that these loan apps and as we have them now, do not require collateral before taking it. And so month on month, people can easily go there and apply for a certain amount. And when we asked people that have they been able to pay back their loans, 81% of the respondents said they are paying back on a monthly basis. And so when they get income, they pay back or like some people who said that they take loans from other loan apps to set up loans from the previous loan apps that they have patronized. And so we had another 15% who said it's been difficult to repay their loans. And we had 4% of respondents who said they have already defaulted on their loans.
Looking at these loan apps at this time, does it mean that right now these loan apps definitely, they seem to be making a lot of money, from this at this time? And I did see a report recently from the FCCPC that more loan apps were added or given approval, at this time. Talk to us about, because you tagged this report, living dangerously, on credit. Talk to me about what this portends for, people that are taking these loans from these loan apps, and how dangerous it is, for the economy.
Yes, so what this report has shown is that food, which already, when we look at the NBS CPI, the CPI from the NBS, food already takes like a major chunk of the items that are weighed in computing the consumer price index, which measures inflation. And so when people are taking loans because they've spent a lot of their money on food and then they're taking loans to augment, it means that there needs to be something needs to be done urgently to address the situation, to bring down the prices of food, or to even offer respite to consumers. We also, as regards the loan apps, we've seen that it is brisk business, and especially from the Federal Consumer Protection Council that is having to deal with these loans and regulate them, especially given the shame practice that these loan companies have adopted in recovering their loans. So there needs to be something done across board. One, to check the prices of food, to check food inflation, to make sure that the prices are affordable, especially as we go into the December season with Christmas and the New Year celebrations, which already over the years we noticed that food prices increase during this period because of increased demand. So of course, something needs to be done to check food prices, and also something needs to be done to check and monitor the practices of these loan apps, because we see that it's brisk business for them.
Quite risky taking on these loans, because you get the loan so easily, but when it's time to repay, you find out you're paying almost 50%, interest rates. Then you start looking for ways to pay off that loan. Then they start sending people messages, your friends, that you're a debtor at this time. All right, looking at the reports, still, I see between 2019 and now, there are things that people could afford, salary earners could afford, but now are beyond their reach. Talk to us about these items.
Yeah, so when we were conducting this survey, we asked people if there were things they could afford between 2019, when the first edition of the survey was conducted, and 2023. And 67% said yes, there were things they could afford in 2019 and they could not afford now. Like you are showing on the chart now, 28% of them identified things that fell into family upkeep, things like paying school fees. People said they had to change schools in order to be able to keep up with affording the school fees of their children. Some said, they mentioned some specific food items that they said they could afford to buy and they can no longer afford. Travel, fuel, entertainment. People said they had cut back on these things, and even charity, giving back, and savings, giving out to people, and then savings. They said that they've cut back on those things.
I cannot see investment there. So that means most of these people are not even looking at investments at this time.
Well, it's only one who has eaten that can think about investing.
Right. Quite incredible, quite incredible. What do you think, the government can do, with this kind of data, that you've worked on at this time?
Well, the essence of putting out reports like this is to guide government decisions, especially at this critical time in the economy. We have seen how this report shows how the recent even and government action over the years since 2019 has affected the average Nigerian consumer. And so we hope that when implementing decisions or when implementing policies and palliatives for as a result of the subsidy removal and even the naira devaluation, when the government is implementing policies, we hope that this can serve as a guide so that they know which areas to target.
All right, so definitely, we're still expecting inflation data for October. That's coming out. We've seen a lot of forecasts about that. Some are forecasting about 30%. Looking at things right now, how much can the average consumer take, at this time, and what does it portend for businesses?
Well, the average consumer right now, the pockets of the average Nigerian is stretched. There's no need to mince words about it. The average Nigerian is stretched, and there is only so much a person can take. And so we hope that the government can offer respite to consumers. Again, like we're saying, hopefully, like in the report, we saw that the respondents in the Southeast recorded the highest decline in income. So this shows that the seat at home and all the insecurity problems that were happening in the Southeast definitely affected the consumer, the consumers. So when they're not able to get enough income and when they're spending a significant portion of their income, or in some cases the entirety of their income on food, it means that businesses who specialize or work in areas that have to do with discretionary income, when you have taken away food, businesses who work in the entertainment sector and all of that can expect very little patronage at this time. And so we expect that as we go into the December season, although there will still be celebrations, but we expect that it will be at a lower level compared to previous years.
Yeah, definitely has a domino effect, at this time. Everything is affected, when consumer incomes are squeezed at this time. Thank you for this report, and we're definitely looking forward to a report on how businesses are also, coping at this time. Are they making any sales? We're looking out for that report. Thank you so much, Sheyi Awojulugbe, Senior Analyst at SBM Intelligence. Great having your perspective today.
Thank you.
All right, we'll take a break now. When we come back, commodities market update is next. Do stay with us.